All right, seems like we are live. Thank you so much, everybody, for joining us today again. Time flies. This is the 9th episode of the first season of Weekly Supervised. It was as of yesterday when we started our first episode, and this is going to be the last episode of this season. After this, we're going to take a short break, and we're going to get back to you with a lot of experienced guests for our season 2, but we're closing this on a very strong note. So today we have with us Parinaz Sobhani. She is the head of machine learning and applied research at Georgian. I'm not going to go into the details of introducing her because I know she can do a much better job. So I'll pass it to you. Please let us know a little bit about yourself, your background, your experience, and what your job entails right now, and whether or not it has changed in the past couple of years, specifically with the effect that COVID has on our job markets in the past year and a half.
It's an ideal case that if at least a few scientists and engineers also working with us, it might not happen. We also help our companies hiring. So since day zero, post-investment, we try to make a case for the ROI of the machine learning for that business, and based on that, we can prioritize hiring and building the data science team if they don't have the data science team in place. And then in terms of how we work with the companies, we over time, as you said, experimentation, because we were one of the very first VCs that they had that to have a hands-on team, because other VCs normally they have high-level strategic product roadmap or operational related type of advisory or consultancy, but they, at least when we started working with our companies, there were no other VC who has a hands-on team. So it was matter of experimentation. That's one of the kind of learning points, was there should be more of collaboration and partnership rather than we're going to take the project and we're going to deliver whatever the outcome of the project. That was one of the most important learning points. And we failed a lot to get to that point, but it might seem obvious, but it took us a while to understand the importance of having ownership in our companies. And then we landed on a few type of offerings, what we call offerings now, menu of offerings of our team. One of them is advisory or consultancy, product strategy, hiring, which is not very unique to us because there are so many other VCs that they are doing similar, or other organizations. The other two are more unique to us and part of our DNA. One of them is what we call Hackathon, which is very interesting. It's just a few weeks of intense collaboration, and we try to add as many as possible people to that kind of hackathon. We try to define the problem, data, challenges, everything before. So it's kind of having a nice setup that for people who doesn't have that much understanding of the problem or product, they can contribute. And our goal is to try to find an innovative ways to solve a pretty difficult problem. It's not very obvious how to solve it. And most likely we are going to first of all show and prove it's technically feasible, because lots of time, that's why I said de-risking innovation and research, that's one of our main mission, is most of the time you really don't know if you have that kind of moonshotty problem. You really don't know if you have 6 months of one of 2 or 3 of your resources, if it's going to work or not. So we can at least prove it's technically feasible, or deliver the proof of concept or the POC. As you mentioned, most of the time it's going to be delivering POCs. As companies get mature, they know how to take that POC and put it in production. And that's, or they might know because they have never leveraged machine learning in their core products. That's why we have another ML engineering team in support of production. And that's the most important piece. And now we have lots of demand for that piece. I guess we all know that ML ops is the next big topic of a struggle for most of organizations. So that's why ML ops, data ops is kind of what we can also help our companies with. The other type of offering is what we call deep applied research engagements, and it's mainly, it can be 2 to 6 months. So it's longer by design because the goal is not delivering POC, the goal is to deliver MVP, and by the end of engagement, we have something in production. we normally have tendency to actually work with more mature companies on more like deep engagements because there is actual research happening. If you are still dealing with the first few machine learning models to put in production, most likely XGBoost is good enough, and most likely it should be the starting point. So there is not much of research other than lots of feature engineering and figuring out exactly how to translate the domain knowledge to some sort of like input or representation. So that's mostly like it can be done in a like mini hackathon as well. But as our companies evolve and they are more mature, for example, one of our we had two very successful deep engagements with two very mature machine learning teams or companies, AI companies, one of them, Tractable, which is a computer vision company. They have a very niche problem. They try to introduce automation and machine learning to car insurance industry. So you can imagine whenever you have an accident, it's a very tedious process. You have to have lots of back and forth with the insurance officers, and it takes a long time to approve their claim and stuff like that. But like what Tractable is trying to do to just make it much easier by just taking a few photos or pictures and uploading it into their system, and it can be automatically estimating the damage, and then it's going to be like a nice workflow for the body shop to also give an asset, verify that asset, compare these two assessments, and then done. You're going to be done with the insurance. So that's a very interesting problem, and it's pure computer vision with top research team. But as they were moving to new geographies, so imagine that most of their customers were mostly in Europe and East Asia, and one of their goals was to move to North America. And you can imagine, we know about distribution. So when you understand like the data distribution, you know that there are going to be differences both in the input as well as output, as well as conditional distribution. So basically, the repair replace kind of strategies or processes are very different from one geographic location to another market. And one of the, again, to call the start problem, we are moving to a new geography. We don't want to start from scratch and like have 6 months or 1 year delay in the revenue. We want to get somewhere as soon as possible. And just by simply aggregating everything we had before from the other geographies, most likely we're not going to get there. So how we can get the most out of the existing models and data we have. And that was more like a research problem, and we could deliver. This is in production now, and actually they just onboarded a new customer in North America, and they used at what we call the ensemble toolkit or domain adaptation toolkit in the process of onboarding.
That's a very exciting use case. I think that gave me a reason to go and do more research. Hopefully they have a blog that I can go ahead and read.
Yeah, there are actually a few blogs. We gave a talk at TMLS a while ago. Also, we have, I guess the team has a talk in ODSC in a few weeks, or it might have already passed. I have no idea. But anyhow, there are a bunch of blog posts and talks that you might be able to find it.
Absolutely, yeah. And if I manage to find them, I'm sure I can find them, but if I don't manage to find them, I'll ask you. Otherwise, I'll just post it with everybody, share it with everybody who's watching, so that they could also take a look at it. Sorry, you were going to say something.
No, I said I can also share it.
Yes, please. All right. So, see, time flies. We're almost halfway through, and I have tons of questions for you. Let me change the subject a little bit. So I'm sure by now the audience have already heard us in previous episodes talking about things such as POC or MVP, but I'm sure there are some phrases, acronyms that are new. So you already mentioned ARR. In retrospect, are there any specific, let's say, I don't know, terms, anything in the investment world, in tech, the language that you feel like if I knew what this is from day one, it would have made my life easier? Anything that you want to, share with our audience so that they could also become familiar with this language? For instance, I mean, there's an example that I shared with you before: seed investment. Like, different people have different definitions for it. Well, you guys are dealing with companies that are a little bit more mature, but I'm sure there are terms that you can share with us that could help us better understand the scope of the companies that are working with you.
That's a very good question. I had a really hard time when I joined a venture capital because I had zero knowledge of the business world and investment processes as well. And I told you I had zero understanding of the startup ecosystem as well. So I had a hard time, but every time I learned about a new concept, I was like, it's a common sense. Yeah. So it's not rocket science. So like, I know that people get a little bit intimidated at the beginning, but then as you are reading about it, it's just really common sense. How much you are earning, how much you are burning, and what is the cash flow like out of it's very easy. And then it's very interesting because why you need venture or VC money, because there is a competition in your market. You want to grow as fast as possible and get as much as possible, to get as much as possible of the total addressable market. That's one of the very common terms, TAM, total addressable market, which is a very good indicator of the market size. And then the other one might be like around like if the market is shrinking, is the market growing? So definitely you don't want to invest in a market that is shrinking. Then the other one, as you mentioned, like the stages of investment, starting with pre-seed, seed, and then growth stage, and then it's going to be later stage, and then going to be PE or private equity. The other path would be IPO or initial public offering, that you go public, you're not going to be private anymore. So that's the kind of like stages. And again, it's really around product market fit and growth of the company. So when you are in a seed, you have an idea, you either have a technology or you might have like a specific problem in mind that you believe they're going to be demand for it, for a solution that can solve that problem. And then you haven't validated as much. You might have like a very few number of validations, but still you couldn't validate it at scale. So you don't have product market fit yet. As you're getting closer to growth stage, you should have passed that product market fit. So you have a product that people are willing to pay for it to solve a specific business problem. That's a kind of more like a product market fit. And then it's just the goal. Your goal is to try to sell it to as many people as possible, as fast as possible, in the most efficient way as possible, while reducing the kind of customization or implementation, because that can be the huge cost to your business. So the biggest advantage of software is that you can build a SaaS or like cloud-based type of software product and sell it to multiple organization. If you need to have lots of customization that should happen, then it's just going to add cost to your business, and then it's going to show up in your financial metrics, what investors look at, like NDR or other metrics that shows the efficiency of the business. But it's very simple. Like, we want to understand how efficient is your business and how much you can scale that business. That's very simple. It's common sense.
Yeah.
And
is there any resource that you could also share with us when you were learning about this? Did you go to a specific website, or was it like somebody who was mentoring you, or did you have to find all of these by yourself?
I normally Google when I hear a new term that I don't know. I just Google it, and there are so many good resources. But lots of people suggest that the Bessemer SaaS metrics, I guess it's like because they introduce those kind of SaaS metrics. So if you want to learn more about the kind of, and it's specific to SaaS, but of course, if you have different model, it might not be applicable to your business. But especially for SaaS metrics, Bessemer might be the best. And Venture Deals is another book that I heard a lot. I haven't read it, but I heard that it's also really. I don't know if you have read it or not.
Not me, no. But I was working with a startup company, and the CEO of that company had read it. So yes,
Okay, you
I
have
also
mentioned
heard that it's really good.
it. Okay.
Yeah. So thank you for that. It gave me another follow-up question, which is more or less around. Um, I don't know how to put it, but so you mentioned competition, and the main goal of any business is basically to try and sell as soon as possible, and everything else that you mentioned. Now, um, the question I have is related to supporting or trying to, how should I say it? Trying to, I don't know, create some sort of a support mechanism for the companies in your portfolio, um, against their competitors, right? Especially if their competitors are also coming from another VC. Um, and it goes towards things such as IP, proprietary, let's say, idea or software or anything else. So I know it's not necessarily 100% related to your department, but
No,
from
it's
your
actually
perspective,
100% related
yeah,
because
perfect.
our goal is to help with product differentiation. At the end of the day, what is the benefit of de-risking research and innovation? Because we want to help you to have a product differentiation, or what we call sustainable moats. And I guess it's kind of like it's been a kind of discussion around how we can have more like sustainable differentiation or moats around our business that can protect us against our competitors. So that if there is a new player in the market, cannot come to our customer base and quickly get whatever we already earn. So that's a kind of like concept of like moats, like how can I build that kind of moat around my business? And it's been very interesting because you mentioned IP, because historically people believe technology is your main moat. And I guess given the new trends in the open source kind of community and making everything or leveraging whatever is open source, people started to question the kind of like IP as a differentiation for your business, because we are most of us are using scikit-learn, TensorFlow, PyTorch when it's the overhyping phase or other open source libraries. So then the question mark will be, what is then my sustainable differentiation, or what will be the moat for my business? And it's a very difficult question, because it's in B2C world, it's a little bit more straightforward. Especially you can see that kind of network effect for example, Facebook awards, as they add more users, they get to that kind of network effect because they can provide more utility to their customer base, and then their moat's going to be stronger. It's a little bit, and when we started to work with our companies, it was a little bit more ambiguous for them. What would be the moats in the B2B world? If IP is not a moat anymore, and we decided to discuss how about data moats and maybe similar data network effect. And then they were like, but we have like siloed machine learning models, and we are not really transferring knowledge across our customers or aggregating data across our customers because of our data rights, because of our customer preferences. And what does it mean? So we are onboarding more customers, but it doesn't mean that we are getting any benefit out of it, or at least our customers, they don't get more benefit, because of course we are building better products and we can improve them, but it doesn't feel the same as like Facebook of the world, as you are onboarding more customers, more users, you have a stronger moat. That's why we always talk about like the importance of, like, again, back to our kind of research areas and transfer learning and differential privacy, how we can combine data. We discuss it in the context of cold start problem when you have a new contract, but imagine if you can combine data or machine learning models, and you can improve the performance of machine learning models for all your customers, whether they are big or small. And then it's going to be win-win scenario, and then it might be much easier if you do it in a trustworthy manner, in a privacy-preserving manner, and you also improve the performance for all your customers. Then they might be willing to actually share data or share patterns. It's not going to be at data level; it's going to be at model or pattern level, and it's going to be win-win scenario for all of that. And then it's going to be a moat for you. yeah, that's a kind of story that, or the way I think or we think about modes in there. And of course, trust in general will be a very strong mode. That's why fairness, explainability, and again, privacy are very important research areas for us.
Sorry about that. So that again, this whole thing is like a Pandora box. If you open it, then there are millions of questions coming out. So I also wanted to hear your thoughts about something else. So we are somewhat in the same domain, right? My job, for lack of a better word, is also to sell AI. And usually what I do, which is maybe interesting or sometimes even discouraging to some of my colleagues, is when I go into a room or a virtual room these days and talk to a client, the first question is, why do you think you need AI, right? So I'm going to connect that to the point that you mentioned before. Similar to that concept, as soon as the open source model changed the business model for software and SaaS, people started, maybe with a closed eye and without really noticing the value, started collecting every data piece, every bit of every detail about everything, pushing it inside a data lake, and then they mentioned that, and this is probably 4, 5, 6 years ago when this whole thing started, and they said, we are going to analyze this data later, and if there's value in it, we're going to use it to our benefit, and if there's no value, then we're just going to archive it or dump it or whatever technical term that is used. Now, we all know how the outcome of that was. A lot of data that was collected, privacy by design, is not really considered, or wasn't really considered. Now we're in better shape. But what are your thoughts about it? Are you which school of thought do you belong to? Do you think that, especially companies at the growth stage, do they have to sit down and think about the type of data that they're collecting, because that's what their value add is going to be based off of? Or do you think that because they are in a rush, because they have to sell to the client like yesterday, they have to collect everything, and then we can figure it out later, and then we could solve the problem of privacy and trust and everything else? Or is there a better solution to this whole thing?
That's a very good question. So, and every time we talk about data mode, people start asking us, okay, does it mean we should monetize our data and start selling our data? It's like, no, it's not what we are recommending. What we are recommending is think about how you can leverage data to improve the experience of all your customers. And if data cannot improve the experience of most of your customers, then no, it's not going to have any utility, and most likely it's not going to give you any mode or differentiation. So, but most likely you can get benefit out of that, out of data. You might need to be more innovative or creative to figure it out, or it might not be as straightforward, but that's what we call a data mode, improving the experience of all your customers by leveraging their data. So by just dumping the data at your data lake, most likely you are not improving the performance or experience of your customers, so it's of no value. And then you said, like,
I think you are frozen, if you can hear me. So, seems like we lost Parinaz for a couple of seconds. Let's just give her some time to come back live. Yes, you're back. We lost you for like 7-8 seconds.
Yeah, I don't know what happened to my network, but you can hear me now, right?
Yes.
Okay, yeah. Great. So I guess what I said was around, if you really don't know what you want to do with that data, you can get really paranoid and collect all the garbage. And most likely there is no value in that garbage, because we know it's not only about quantity of data, it's also about the quality of the data. And because you haven't thought about how do you want to use it, you don't have the right data pipeline to kind of have some sort of quality assurance on the data that you are collecting. And most likely it's going to be garbage in, garbage out. So early on, figure out your strategy around how do you want to leverage that data? Even if it's like going to be 5 years down the road, still that's okay. Start thinking about it. Start working on your contracts and data rights contracts. Start working on your data pipelines. And 2 years, 3 years, 5 years from now, you're going to be ready to introduce machine learning and data science to your core business and improve the performance of your and experience of your customers. That's the kind of way you have to think about it. And then most likely they're gonna, as you're thinking more seriously about your contracts and data rights, you're gonna have you should have transparent discussions with your customers. So it's not gonna be only about legal language, it's gonna be also transparently share with your customers what you have in your roadmap. And then there might be some demands from them. So no, I don't want to have I don't want my raw data to be shared with another potential competitor. So then there are going to be question marks around how can I ensure the privacy, ensure the kind of protecting that type of even if they call it their own IP or their own mode. Just try to figure out how can you have the kind of fair value exchange. What does it mean? It means I'm not going to just combine your data for the sake of my business. It's going to provide X value for you. So it's just going to make it much easier to have such discussions with your customers transparently. And then fairness and bias going to be different discussions. Again, it might come from your customers' kind of demand or requirements, but it might not. But we know it's because those of us who have worked with cybersecurity companies and we know the value of cybersecurity market, we know it's more about the risk to the brand rather than the actual customer requirements, because we know if anything happens, the damage to the brand will be very, very significant. And actually, fairness and bias type of box, that's what I call box, are very similar to privacy and security box because they are very hard to identify and there is no way to simplify or oversimplify the problem. They are very complicated or complex problems. That's a kind of our view of.
Yeah, it's just reminded me of a certain US-based retailer who came into Canada a couple of years ago, and then basically within a couple of months they had to close all their stores because of that same issue. I'm sure everybody can go ahead and Google and find out what happened to them, but it was the same challenge, right? All right, so we have another 12, 13 minutes, so I want to hear your thoughts about something else. So I know that specifically at Georgian, you guys work with more mature companies at growth stage. Usually at seed or pre-seed, people build a lot of prototypes.
Yeah.
You kind of answered this question, but I just want to get back to that one more time very quickly. At the growth stage, not necessarily when it comes to machine learning research and products, but generally speaking, do people still build prototypes, and is that what investors at the growth stage are looking for, other than the revenue, or is it more or less focused on expanding the market?
Exactly. Going to adjacent markets or JSON markets. Exactly. That's what most likely, even if you're very mature in your own market or your own offerings, as you're thinking about expansion, one way is to, as you're getting closer to total addressable market, depending on your market, then you have to start thinking about JSON markets or adjacent. And then as you start thinking about JSON markets, it's just starting from scratch by leveraging some of your assets. And that's why you might have exactly, again, similar kind of prototypes and POCs and customer validations as well. VCs, I don't believe they pay for that type of prototypes, but if you have it in your roadmap, if you have it in your strategy, and given that we know you already could execute very well on your existing products and offerings, most likely you can also have a very good execution on new and adjacent markets, then that's going to be how we project the revenue in 5 years, 10 years from now. And that's how we come up with the valuation of the company.
Interesting. Yeah. So all right. So that makes total sense to me. Another somewhat related question to the growth stage of the company. So going from, and again, I'm just going to use these terms in a very loose way because the lines are very blurry, I guess. But going from like scaling from a startup to a scale up, I want to hear your thoughts about it based on all the companies that you have seen, not necessarily worked with, but have seen in the ecosystem. When do you think a company, a CEO, CTO, COO, CFO, doesn't matter, when do you think they're ready to make the jump? Is it solely based on the revenue that they're making or the size of their team, or what are the factors? And from based on, from what you have seen, and do you think that there is some, I don't know, best practices that would determine whether or not a CEO of a startup is a good option to become a CEO of a scale up as well, or should there be some kind of a breakup in the middle?
Once I heard, I guess, in a podcast around different stages, and it made lots of sense. And that was I learned from that kind of podcast was like there are 3 stages: the product market fit stage, the go to market scaling stage, and the last one is the operational kind of stage. So the first one is the CEO's main responsibility with figuring out the product market fit, building something that people are willing to pay and solving it because it solves a problem and has a proven ROI. That's again a very important a very important concept for that stage. And that's the most important. And then you have to have a repeatable engine for sales and marketing. So that's what we call then we need a go-to-market CEO. At some point, we need a go-to-market CEO or that can figure out, okay, I could sell to 10 customers because I could figure out the problem and I come up with a solution, but I need to make it repeatable. I need to make it an engine, working engine. And then you need to have a go-to-market CEO. And then the last one, as you get to that mature state that you figure out the product market fit and go-to-market, then it's just scaling the business. And then it's going to be 500, 1,000 employees and run an organization that has scale, which means the most important maybe challenges will be around operation. So then you need to have 3 types of people, or you need to have a person as a CEO, or you need to have a CEO who can quickly adjust and learn how to be do a completely different role, or manage completely different types of challenges. And I think it made sense to me, like no matter what are your financial metrics, if after you figure out the product market fit and had reasonable number of validations, then it's time to figure out the go-to-market, and then it's time to figure out the operation. And it made sense, from my perspective. Again, are you gonna and you need to have different leadership team for these types of challenges, or even if a CEO doesn't want to solve all these problems, should have very good visibility into the blind spots of him or he or she, and be able to recruit the best people to fill that blind spots.
Do you think that there is a similar mapping when it comes to the other roles, for instance, CTO? And I'm going to give you an example. So a lot of early stage startups, all the way to pre-seed, even seed, the main technical person, majority of them, not all of them obviously, it can be a junior developer or a junior machine learning engineer, right? And then at some point they have to grow, they have to learn how to manage teams. And again, as you said, at some point the requirements of the company, but now from a lens of a technical person and perspective, changes, right? So at some point, I'm sure we've all seen this. Maybe a 20-something-year-old CTO would go ahead and hire a VP of engineering who has been in the market for the past 30 years, and dealing with the challenges of that relationship is something that I personally find very hard. So do you think that there is a similar mapping, and if there is, then what would it be? And if there isn't, how do you think that is it the VC's job to also give consulting to the companies in their portfolio as to whether or not a CEO or a CTO is the right fit for that current stage, or do you think that that's a decision that the CEO has to make?
I think, yeah, it might be a discussion for boards as well, not only the the, the kind of board members from venture capital. Normally, if you can diversify your board team, so that you can again cover all the aspects of running a business, software business, that would be an asset for you, because they can help you to identify the gaps in your leadership, and whether they could move to the next level or not. That's going to be a question mark for the CEO, first of all, and then second of all, it can be a board discussion. I think, like, again, I don't have like a as nice mapping for like technical teams, but in my experience, I was also individual contributor at some point, and then I have to be a leader and I have to run it and lead a team. And it's a transition. It's not easy, because you are on top of everything. You are hands-on. You enjoy actually to stay on top of everything. As I guess I can imagine, as a CTO, you design this original system and softwares, and you are the architect as well, and you are the first engineer most likely, and then at some point you have to make this transition that I cannot stop. I cannot stay on top of everything, and I have to trust people, and I have to get comfortable with not knowing what everything is happening in my department, in my organization. And that's, I guess, the biggest transition point. And of course, as you're scaling, it gets more and more difficult, because you have to delegate more and more responsibilities, and you have to get more comfortable trusting people. Lots of people can never pass that transition. They pretty much stuck, and that's why we have lots of micromanagers that they could never move on, and they never give the room to their team to also grow. But it's, I guess, similar. Doesn't matter is technical or not technical. It's more like a kind of evolution from more IC to a leader, kind of.
Makes sense. Makes total sense. And I know we only have a few minutes. I actually have a work call right after this, so I will reach out to you and talk to you after the call. But as my final question, maybe the elephant in the room. So Georgian works in North America, but we're both located in Toronto, and I do believe that we both care about the Canadian ecosystem very much. What are your thoughts about the Canadian innovation ecosystem? Do you think, and we've heard all of these stories, and we've seen all of these cases of companies being acquired, if not merged, into U.S. conglomerates. So do you think we stand a chance compared to U.S. investors, or do you think there is a way forward for the Canadian innovation ecosystem to become more independent? Or is it just a matter of the number of users, and because of that, U.S. market is always going to be the winner?
I don't believe the challenge is any of those things that you mentioned. I guess the main challenge is the ambitious. Maybe it's more the culture of, like, we are not as ambitious as nation. So we hit the sailing very soon. Like, okay, it's good enough. It's a multi-million company, and I'm done with the rest of my life. So why not selling my business at this point? I guess that's more like culture. I don't know. I didn't raise and grow up here, so I'm not the best person. Similar to you, I also care a lot, and I hope. But I feel like we, especially the past few years or past year, we got several good data points, and I think we are in the right path. Mm-hmm. And I think from my perspective, it's very encouraging. We are making lots of progress. And as we see more and more examples, I guess it's going to be the kind of shift in our kind of this, like, we're going to have bigger, we're going to be more ambitious, I guess, as much.
So then I think that, in my opinion, more Canadian VCs might be one potential solution. I don't want to, obviously it would be a competitor for Georgian, so I don't want to put you in a tough spot, but at some point I thought that's the only solution, but then I realized maybe not. So maybe that's a conversation that we can have at another time in a panel, maybe in a future episode of a future season, and for that. Maybe you or maybe somebody from Georgian could join us on that panel.
I guess someone from our investment team might provide insights into what's happening in the ecosystem in Canadian and Toronto ecosystem, and what does the future look. How does the future look? I'm pretty optimistic.
You are optimistic, yes. All right, perfect. So I think we're right on the mark of the hour that we had. I don't want to keep you waiting because I know you're also super busy. Just a few final pointers. So again, as I mentioned, this is the last episode of our first season. We're going to take a short break. Just be in touch with us on LinkedIn. We're going to come back with loads of interesting material, more guests for our season 2. Just wanted to thank you, Parinaz, for taking the time to talk to us today. I really enjoyed our conversation and hope that we could get past this COVID stage and have another one of these maybe in person.
Sounds great. It was a pleasure joining the conversation with you, and I hope the others also finds it helpful and useful.
I'm sure they will. All right, everybody, have a great weekend, and I hope that we could have you on the show again at some point.
Great.
Take care.
Bye.
Bye.